Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
And what I'm looking at, Rick, here is I'm looking at the 86 and I'm looking at the 86.5. So I've got a 50-cent spread. And what I'm looking to do here is, see if you got it set up right, a little bit different than my screen. That's okay. So the numbers I was looking at earlier in the day, we've got a few changes on the numbers here. Let me run them for you, though. When I was looking at the August, the 86, what I was seeing there was I was seeing a price that I assumed I could execute right in between the bid-ask. We're bid at 74. We're offered at 85. Forget that last trade. That could be ancient history. But bid 74, right. Offered 85. Assuming I could execute this at 78. So if I could get 78 cents for this then, okay, I get 78 there. That's going to be a credit. Now, by selling that 86, I'm obligated to deliver at 86. What if it goes to 90, right? Then I'm going to be buying something at 90 that I sell at 86 or I deliver at 86. So I need to hedge or spread my risk by using some of that money that I had come in, that 78 cents, and going and buying a hedge. Well, in this case, I want to be very, very conservative. So I'm just going to buy the 86.5. Well, the 86.5 bid 51 cents, offered at 62 cents. When I ran the number here, let's say that I could pick it up at 56 cents. So I received 78 cents per share in this case, even though they're cash settled. I'm still going to speak in shares. So I received 78 cents. I took a large quantity of that money, or a large percent, 56 cents to be exact, and I spread the risk off. So selling calls to open the 86, buying calls to open the 86.5 to create a credit in my account of 22 cents. Now, 22 cents, and there's 18 days, or technically 17 days left in the life of this. The current price of $85.79. If the price of YUK stays below 86 cents, then that $86, then that 22 cents is mine. What's the worst case? Well, the worst case in this example is, what if it goes above 86.5? If it goes above 86.5, then I'll be obligated to deliver at 86. Something that I have the right to buy at 86.5. So therefore I lose 50 cents, but I don't lose all the 50 cents because remember I brought in 22 cents in the form of a credit. So my maximum risk on this spread is going to be 28 cents. Now, is this a high probability trade? It's not ultra high probable, but I will profit from this trade provided this stays below 86. So if it just stays where it's at right now, in 17 days, if it is right below 86, I will profit. If it goes lower, I will profit. If it goes higher, I will profit as long as it does not go above 86 upon expiration. So it's very easy to calculate the break-even. It's very easy to calculate your maximum loss and your maximum gain. Now, if my maximum loss on here is 28 cents and my maximum gain on here is 22 cents, my risk on return, or my return on risk, is 78%. That's pretty nice. This is the kind of directional trade that you can take using these kinds of options. What if it does move up? Do I need to worry about an early assignment? No, you don't, because it's European settled. Do I need to worry about buying and selling shares? No, you don't. It's cash settled shares. That's the beauty of these types of things. And again, the trend for a currency tends to last a little bit longer. Even though I'm only looking at a 17-day trade, I like the fact that these trade at 50-cent strike prices. So I can create very simple credit spreads or debit spreads. In this case, I wanted to show you a credit spread because this spread will profit also from theta decay. I've been talking with Bob a little about theta decay on Q&A. Theta is simply the cost of money moving forward. And since you're in a credit spread, you will be making the money instead of spending the money. And I just saw a question pop up. If you sold 86 and bought an 86.5, you'd have an 8-cent credit. So Bob, what you're looking at is the natural market. You're looking at the bid and the ask. And what I'm doing is I'm working with the market to work a spread in between the bid and the ask into my favor. Can I always get in between the bid ask? No, not always. Do I try to get in between the two? Yes. Do I try to get the opposite end of the bid ask? No, that will never happen. But I always try to split the two as best I can. Okay, good. You saw that. You saw that I answered that real quick. Rick, we're just about out of time, so I wanted to throw in some strategy real quick in the end. You may have to listen to it in the recording to understand what I was going through, though.
No, that's good stuff. But you know, we had an opportunity to go through the yen pair. You know, the ones that I look at quite frequently, things like dollar CDD, which is the U.S. dollar against the Canadian loonie, partially because I travel up there, and partially just from a trading standpoint. This one is another one that it's a very nice technical mover. It has very strong support and resistance, as you can see. There's a key line right at parity down here, and for obvious reasons that, you know, that's something that everybody watches. Once the loonie and the dollar reach parity, it always makes the news, and so there's going to be a lot of movement around there. You know, here's the point that we want to make. You know, we're not obviously going to have an opportunity to go through every currency pair, but here's what we're going to do as we get ready to wrap up today, and we'll hand it back over to Elena to just have final comment. That is this. Don't always run to the same thing that you've always run to before. Many of you have not yet traded the ICE-FX currency pairs. This is a good way to enter into the option waters with something that moves very technically. You're not going to be surprised by an earnings announcement. You're not going to be surprised by a CEO resignation. This is something that is economically based, runs very technically, and allows you to step in with a product that's been made available to you. So let me encourage you to take a look at that. Keep an eye out. I just want to make this one comment. Keep an eye out for promarketadvisors.com. We're going to be launching a new site here coming up shortly. So that's going to have our upcoming events. It's going to have some great educational resources. So just keep an eye on that. And one last thing that I want to encourage you to do before you leave today, if you're enjoying these, and particularly if you're enjoying today, please take a moment in the Q&A box and just give us your feedback on this session today. We use that, and we love to see that. So with that, I'm going to go ahead and just Elena, do you want to have just a final thank you and so long, or a closing comment for the ICE?
Thank you very, very much, Rick and Sean. We really enjoyed having you both present today. I think on behalf of everyone who was able to attend, we definitely wanted to thank you for the very, very instructional presentation, which will be archived and available tomorrow morning on www.fxoptions.com, which I'm just going to type in as we're speaking, /events. So that's where all of our recordings are posted, and so just look out for our email that we also send out. And just make sure that you also tune in next week. We have John Person, who's going to be presenting on candlestick and pivot point strategies for FX options. And if you have any questions at all about this presentation or anything else, just feel free to send your questions to ask@fxoptions.com, and we look forward to hearing from you. So once again, thanks again, Rick and Sean. Have a very nice afternoon. And
Thank you.
We look forward to having you both back.
Thanks for having us.
Thanks, all.
Okay, thanks.
Bye-bye.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.